Hey there guys, hope you're all well and welcome back to another video on the channel. So by the end of this video, as you can see on the screen now, you are going to be able to trade and find your own positions using this trendline strategy here. Now, if you've watched previous videos of mine, you're going to obviously know that trend lines are a very powerful tool that you can use within the market. Some people will agree, some people will disagree. That's just part of trading. So what I'm going to do, I'm just going to break down exactly what we're looking for when we are trading markets like so. So it's a very simple strategy that I want you to obviously open your eyes to here. See just what you can do. The risk to rewards are very good. So obviously assuming that your wins outweigh your losses, then again, you're in a good position. Okay, so breaking down the basis of the strategy is that, as you guys know, you can trade trend lines when they are moving, for example, in a channel. How do we do this? You just basically draw a trend line on the highs like so, or if you was in a downtrending market or an uptrending market, sorry, if I just get rid of this, if you're in an uptrending market, this is something that you're also looking at, okay? And what you would do is mark up the lows. So there's two ways to obviously use your trend line. In a downtrending market, you're matching up the highs. In an uptrending market, you are matching up the lows. What we are doing though is we are waiting for price to break this trend line here, okay? So if you was in a buy market, the position would obviously break the trend line to the downside. If you was in a downtrending market, it would break it to the upside. Now, the most simple part, but the most important part, is looking at where price breaks the trend line. So instead of, for example, looking at market structure here and here, which is what some people would obviously do when looking at the market, instead what we are looking to do is see where price broke the trend line. So in this situation here, price broke the trend line here and price broke the trend line here. So all we are looking to do is, when price comes back to that area, would be to get into a position, okay, like so. All we would then do is, there's a few confirmation entries that you can use. You could use a pending order, where you would basically just set an order, set your stop loss below the area, and aim for the high as your first TP. Second option would be, for example, to do the same in terms of your TP and that side of it. But what you might want to do is wait for some form of rejection candle that obviously you are interested in taking. So if I do this, you might be interested in something like that, waiting for a rejection candle, waiting for the price action to get into the trade, and then you are going to do that. So let's just look at some previous examples initially, because I just want to show you exactly what's happened. So when you draw in your trend line, the bigger the trend line, the better, whether that's more significant highs, so like something like here and here, potentially yes, or if you've got a trend line where it's well respected like here, okay? So that's pretty much the simplicity of it. If we just look back and see what's going on, if I just quickly do this rather than just getting rid of all my drawings, this is what we are looking at, okay? So what did we see? So initially here, we can see that the market is going along. Here, you've got a high, a high, a high, a high. Really nice downwards trend line here, like so. What have you then seen happen is that where price has broken the trend line in and around here, price has then, in this scenario here, it just missed it. But obviously, if you were looking at price action, going back to the whole entry method with the candle, you might identify that this bullish engulfing candle is enough for you to get into the trade, and you would maybe look at something like that, targeting the high up top, and there you go, you've got a 4.8 to 1. So all you have basically seen happen, if we just replay this, and I know guys, people in the comments will be talking about replay mode, etc., but this is proof of concept, okay? You can't learn something when the market is playing out live. These are previous examples of this working, okay? So price will obviously come down in and around these areas like so. You can see prices come down around it. You're waiting for that bullish price action to come in. You've got your engulfing candle here, so then you would enter the trade, or alternatively, you might have set a pending order like so, and this one might just have missed, okay? So 2 entry models there with what you want to do, and that is absolutely fine, okay? So that would be option 1, would be something like that, okay? If we then look and continue to see what happens, price then keeps pushing up, and what do we see? We actually have a trend line here. So we've got a high, a high, a high. Assuming the third touch doesn't work, which it didn't, what you are then potentially going to do is simply, if we just look at this, just wait for price to obviously come back there. So you'd be waiting. Some people would have a pending order here. Some people wouldn't. You might want to wait for price action. That's okay. But in the process, price is coming back down to this trend line here that we pointed out initially. Okay. What then happens? Price then breaks the trend line like so. So in these scenarios, what are you doing? Are you potentially going to set a pending order like so? Stop above the area. So that's option 1. Or are you going to wait for some rejection wicks, okay? So price comes in, leaves a rejection wick. Are you going to get in the trade? It's up to you. Or are you going to wait for something more bearish, like maybe a candle like this? And then obviously that happened there. So that would be another example like so. That trade then run in to what we said earlier regarding where price actually broke the trend line. You can see price has come into the area and then obviously done a reaction. So you've still got the break retest of the trend line. It's just after the fact it's happened, okay? So that's something to bear in mind. Then as you can see, price is then pushed up, etc. What then happens? Price then comes up. A new trend line is created here. So you're matching up the highs, absolutely fine. And then price comes down, breaks the trend line. So are you waiting for the retest with a pending order? Are you doing price action? Completely up to you which way you want to do it. So you might be in now, and then as you can see there, you've got a nice engulfing bearish candle. So what you could do is do that, and then maybe target some lows along the way. Okay, so this is basically just proof of concept for you guys, simply just waiting for that. And then as you can see, price then creates a new trend line. A trend line is created by 1 to 2 touches, or I say, well, it's 2 minimum, because obviously you can't make a trend line out of 1 touch. And then as you can see, same again, price breaks the trend line here. Are you setting a pending? Are you waiting for price action? What do you want to do? You might want to wait for a bearish kind of rejection candle like so, before price then comes down and then obviously takes out the low here, okay? So that is something that you can maybe look to approach the market. I'm not saying, guys, that this is the best strategy in the world. All I'm saying is that it's a strategy that you could potentially look at and learn from when it comes to, obviously, the market, okay? So if you do have any questions regarding what's going on here, please just drop them in the comments. Obviously, as always, if you do want to follow my trades, learn the way I personally trade my funded accounts and things like that, then all the links are going to be in the bio for you. So yes, guys, any questions regarding this strategy, just leave them in the comments. More than happy to potentially answer them and help them. But the main thing to take away from this video would be that when price breaks a trend line, it will usually retest the area where it broke it. And the other thing, for a trend line to be valid, you need 2 significant touches of the trend line to then obviously be able to justify the move, okay? So yes, guys, thank you very much for watching this video, and I'll see you in the next one.